Well, hello everyone. Welcome to Short Verticals and to the last class of 2024. And actually, to the last time I will be teaching as the regular instructor. This short vertical class. Changes are coming in, and it's not just the weather. Connie Hill is going to be teaching this class in 2025. She is a great coach, and I know that she will do a fantastic job with us. So this is our last time together. Next week, we are dark between Christmas and New Year's, so I hope everybody has a fantastic Boxing Day, but we will not be seeing one another. Now, the trades we place today, I will follow up on in the trading a smaller account class. And we have a whole bunch of short put vertical trades on, and many of you know what happened in the market yesterday. So we're going to go and look at those. So we're going to do a little bit of trade management, and we're also going to place some new example trades. Okay, so just hold on. I have a tickle in my throat. The tickle came when I started talking, isn't that always the way, right? Okay, so I have a lot to cover as always. So I want to get right down to business. If you are not following me on X, you're missing out. I'm posting charts and lots of other great content there on a daily basis. So my handle at Barb Armstrong CS, it's another free resource and a way for me to communicate with you and you to be able to reach out to me outside of webcasts like this. Cameron May is with us in the chat. He is a friend and fellow coach. I started back in 2011 as a client, and Cameron May is one of the coaches that I have learned a ton from. So it's great to have him riding shotgun in the chat. So if you've got questions, please don't hesitate to type them in, and between Cameron and I, hopefully we've got answers for you. If you're watching in the archives, you can just type your questions into the comment section down below. And whether it's just that you love the class or whatever it is, I respond to those comments on a daily basis. If you've got a question, fire away. As we head into the meat of the matter, just a quick reminder that, all the example trades we place, and we do lots of them, but they are for example purposes only. Know that options carry a high level of risk and aren't suitable for all investors. We use the Paper Money platform on the Thinkorswim desktop platform, and it is a brilliant place to learn, to make sure you understand a strategy, that you have a trading plan, that you understand how it works, that you understand when you're getting out, whether the trade goes for you or against you, and then how do you handle days like yesterday? What do you do? Some people shut off their computer and they go for a walk. There's the head in the sand approach. And some say, you know what, this too shall pass. And so it's not a head in the sand approach. They're saying, I'm going to wait for the market to settle down, and maybe, all will be well in the end. Have you ever seen the movie Shakespeare in Love? Like, how will it work out? I don't know. Just trusting that it will. So know that, and this is important for us in this class, that short options, we don't get to practice those being assigned early in Paper Money, because short options will never be assigned early in Paper Money, but that can happen in a live account. Yep, and I've seen it happen. So I just wanted to announce the new schedule. I'm going to show you where you can access that. We're going to go out and have a quick look at what's going on in the markets, and I think it's a lot of interesting stuff is setting up. And then we're going to both look at how that impacted our trades and place some new example trades. Okay, so if you want to see the new schedule, pretty easy to do. You're just going to bring up a new tab and go to schwabcoaching.com. I've also posted a link to this on my X feed, and I will post another one this afternoon, but we're just going to, so it's Schwab Coaching. I'll put that link in the chat. And then you're just going to come to live webcasts. And if you're saying, okay, so what's happening with this class in January? So if we come and we look at January and we look at Thursday, we can see that this class is, same time, same place, new face. And if you're saying, well, hey, Barb, what are you teaching next year? You can come to coaches and then just pick a coach. And so you can see I'm teaching every day. Trading a smaller account isn't changing. That's still high noon on Mondays and Fridays. Cameron and I are doing a switch. He's going to start teaching the Getting Started with Options series, and I'm going to trade places with him and start doing the Getting Started with Technical Analysis. So I'm kind of excited about that. And then there are 5 new classes being added to our curriculum. One is this after hours trading, which I think is going to be a really great class. And we're going to talk about if you have a full-time job or you're busy during the day and you just want to be able to sit down like after the kids are in bed or after dinner and look at the market. It's like, how can you place trades and be mindful, whether it's a long-term investment or a short-term type of trading strategy. And we'll be looking at both stocks and options in both that and the trading price patterns. But this is how you can see kind of what's up for next year. We're adding a class on trading index patterns. We're trading a market outlook, kind of a market in review on Friday afternoon. So a lot of good stuff coming. Okay, so let's go now just so that you can see when you sign in Monday and you're going, hey, I thought this was, Getting Started with Technical Analysis. What's Barb doing here? Well, you're going to start seeing me there, and you're going to start seeing Cam and Getting Started with Options. So lots of great changes coming. Okay, so when we look at the S&P 500, it's still up 24% year to date, but yesterday, I don't know why everybody got their knickers in a twist and we saw so much selling, but we had the Fed announce a 1/4 point rate cut, or to use Fed speak, a 25 basis point rate cut. And then the market, maybe it was something that, that Powell said, but we had this huge sell-off, and that happened on all the indices. But, it came down to this old resistance level, which became a support level. And then today we have an inside day shaping up, or a Harami pattern, which means today's candle is inside the body of yesterday's candle at a support level. And so this is considered to be, a bullish pattern. Okay. So Chicken Little can stay, back in her hut, back in the barn, so to speak. And what's happening with the NASDAQ? Same thing, right? Like up still 26% year to date, which is extraordinary. It's having an extraordinary year, sold off along with everybody else yesterday. And then today, inside day at what? At a support level. This 30-day moving average seems to be acting as a support level for the last several months. And it didn't even go down and close below the 30-day yesterday. It just came down and flirted with it. And today it seems to be using it as a bit of a trampoline, low bounce so far, but a bounce nonetheless. Okay. How about the Dow? Now the Dow 30, it was down 10 days in a row. And then the last day, it was like it was walking down the hill, and then it just decided to dive off the cliff along with everybody else. And, it's come down to this 100-day moving average where, the bulls would be hoping it's found support. Again, this Harami pattern happening today at a potential support level. So have the brakes been put on? Some would say, we hope so. Others would say, well, we'll wait and see. This could be setting up a bear flag pattern. That's the way the bears would be looking at it. And who knows which one is right until time goes by and we see it one way or the other. The Russell, the Russell up a modest 10%. I mean, compared to the 20-some% of the S&P and the NASDAQ, that seems like less, but it's given back like almost 10% of its gain since what? Since November 25th. In the last month, it was up 16. Well, it's now up 10%. And what did it give back? Let me just bring my drawing tool. From this high to here, down 9.5%. That's a pretty big give back. Like half your gain for the year just went bye-bye. So, will it say hello again? We'll see. We had this, wedge pattern setting up and it broke out and it looked like this line was going to act as support level. And then yesterday that got kind of blown out of the water. Okay, so we'll have to the jury's out on this. And we don't trade a lot of small caps, but we do always look at this index. And then the VIX yesterday headed for the skies. It was like one of Elon Musk's rockets, right? Taking off into the stratosphere. Because for the last, since, the middle to later part of November, we've been trading, the VIX has been trading under 15, which is at the low end of the range for this year. And then all of a sudden, like kazam, it took off. And yesterday hit a high. What was the high yesterday? Of 28.32. Now, today we're back at 23, but a long way to go to get back to 15. Yeah. And so what does this mean? It means there could be some money in selling strategies. And fancy that. What are we talking about today? Yeah. We're talking about selling strategies. Okay, so let's start with 5. So why might we start with a stock like this? Well, one, it's a consumer discretionary stock. And if we come over and we look at the sectors, we say which sector has been the strongest in the last 3 months? Well, that would be consumer discretionary, which hit a new intraday high yesterday before it decided to, follow suit with everybody else and tank. And we're seeing this pattern all over the place, aren't we? This Harami pattern. But it has been the leading sector for the last 3 months. What about the last month? That would still be consumer discretionary. And then communications, and then technology. That's in the last month. And consumer staples are starting to kind of gain some traction, although the last few weeks have been a little rough. Okay. So, this is interesting information to have too. Financials were really screaming along. And then, yesterday they joined force with the rest of the market. Everybody went cliff diving yesterday. Okay. So let's go back to 5. And when we look at this chart, this is a stock that's been on the struggle bus this year. I mean, it is down 50% year to date. In a year when the S&P and the NASDAQ are up 30, but do we see perhaps some changing fortunes for this company? And if we look at this and we're playing, as we like to do, I spy with my little eye, what are you seeing? And somebody responded to one of these that I posted a picture of this yesterday, of this chart. So could we call this a cup and handle? Here's the cup, here's the handle. I know it's a big handle, but it's kind of a sloppy drawing. And it went from 65 to 102, so a range of about 37. So a technician might look at this and say, well, what might a potential target be? Well, something up here around this 139-ish level. But could we look at this and say, well, hey, we had, this acting as a ceiling, and then it gapped up on earnings, came back to retest, and seems to be walking back up the hill. Could we sell something maybe, at that below 102 and get enough premium to make it worth our while? Well, let's go see. And so I do have in the Trade Management mini session collection, that webcast series, an example trading plan for short put verticals. But we're going to just come here to January and say, hey, well, you know what? We want it to be below 102 so we could be at the 100. Now we have 233 contracts. We probably aren't going to do more than 1. So that would meet our criteria, 1,800 contracts on the 95 strike, 15-cent wide bid-ask spread. So we're pretty good on all those. we're only at 614,000, but if we come out, oh, I don't have volume on this. I'll add that in later. But, we're looking at a stock that I think typically does trade over 1 million shares a day. So if we come and look at selling this vertical, what would we get? Well, we'd be paid $1.37, which means what? Which means we're risking $5 minus $1.37. So we're risking about $3.63. So if I took $1.37 and divided that by 363, that would be about a 37% return, potentially our max return for a trade we'd be in for 29 days. And our kind of rule of thumb to make it a kind of sort of like an apples to apples comparison is if we're in it for 29 days, we'd like at least a 29% return on risk. If we're in it for 35 days, we'd like a 35% return on risk. Now, I've had people type into the chat. It's like, if I'm not getting a 50% return on my risk, I'm not placing the trade. Well, that's you. If you want that to be your example trading criteria, then go for it. But the closer you are to where it's currently trading, so we could do the 105 and we'd get a bigger premium. So if we did the 105 and the 100, we'd get $1.90. So, and then what are we risking? Well, we're risking 310. So if I take $1.90 divided by 310, that is over 50%. That's 61%. But when I look at the probabilities on this, we have an 88% probability of it touching as opposed to 65%, a 45% probability of it being in the money. This is in the money versus 33%. So I'd rather it be a 33%. That gives me a 67% based on where it's currently sitting, chance of expiring worthless. So I'd rather take less and have a higher probability. And when we come and we look at the charts, some people will say, well, I'm just doing it based on the probability. Other people will say, I like looking at the charts, and I am, I'm a chart person, in that if I'm going to do a short put vertical, I kind of think of these support and resistance line as like knights guarding, a castle. And, I want to have at least one knight between me and my strike, so I've got one could say he was a knight, keeping people away. Now he's kind of looking in another direction. And every time it comes down and touches, I think that more knights are being added to the line. It's just kind of my way of visualizing it. But, we hung out here for 3 days, kiss the line. Now we're moving up. So you could say, oh, I got 3 knights there, but I want to be below that 102 level. And so we're going to do this, we're going to do our strikes and that's the logic behind it. And another trader might say, that's too conservative. I'm not doing that. Well, don't do that then. Everybody has their own trading plan. I'm just taking you through the conversation a trader might be having in their own head. Oh, Paul is saying this one averages 2 million a day. Okay, so thanks, Paul, for checking on that. So when we come and look at this and we say, well, our example trading plan is that when we have 80% of our max gain, we'd like to take the risk off the table. And even if we feel we have our max gain and we have a high degree of confidence that it's going to expire worthless, we're not going to take the chance of being wrong. In our example trading plan, we always want to close out the trade prior to expiration, even if it may mean that we're throwing, 5 cents a share. We feel that we're throwing it away. I consider it an investment to ensure that my unrealized gain, in fact, becomes a realized gain. Okay. So we took a while on that one, but I wanted to kind of walk you through some of that thought process. So we're going to put it in our short put vertical group. We're risking $368, and in our small account, we don't want to risk more than $500 on any one trade, so we're just doing one contract. Okay. So here's another one that I thought looked interesting. So this is trend reversal pattern day, I guess. But the Lulu hasn't been getting a lot of love of late. Now, a lot of people I know love Lululemon. They love their products. Not a recommendation to go out and buy Lulu. I don't have any in my cupboard at the moment. Maybe, but Christmas is coming. You never know, right? So we can see here's a stock. It has not been riding this wave of optimism, down 27%. And so you may say, like, Barb, what are you doing looking at a stock like this? Well, we have this big consolidation pattern, right? And, it hit this ceiling way back here in April, and then came down, hit a low of 226. And then on the last earnings, this gap to the upside, and then has come back. And what's it doing now? Retesting. So we have a breakout. This account started, Mighty Mouse is asking, what is this account size? So this account started at 20,000 back on November 1st of last year. So usually we reset the account in January. I didn't reset it because we had just started it in November. So this will have been 14 months and we're, at 39,000. So the account is almost doubled in size. And in fact, if we hadn't been bludgeoned so badly yesterday, I think we were down about 3,000 yesterday. We really got hammer smashed. And that is not typical for this account. We have never been up over 100%. And we haven't had a ton of base hits either. A ton of like grand slam type trades. It's been a lot of little wins, little wins, little wins. And managing our risk and admitting when we're wrong quickly. Okay. We close out the trade if it reaches a 50% loss in the long verticals. We do that with long verticals. With short verticals, we kind of want to manage it and look at it so we don't put in an exit. But if it breaks a resistance or a support level, like here, if we put on a trade for Lulu at say 365 and 360, we want it to stay above 370. And currently it's at 372. If it breaks that support level and looks like it's going to keep on falling, we might decide to close out that trade regardless of how much we're down. Okay, so let's come and look at Lulu and say, well, if we want to do the January, the monthlies, we're going to have more volume. So here we have hundreds of contracts instead of dozens of contracts. We have a 50-cent bid-ask spread on a $14 option, which, we could be $1.40 and that would meet our criteria of acceptability, but these are $10 wide. And we've done enough of these to know that we can't afford a $10 wide spread. So if we did the 370 and the 360, we don't want to risk more than 500, 600 max. Like we're risking almost $600 here. And we're at the 370 strike, which is just underneath. But I mean, the one advantage is it gives us a little bit more time. But some might say, well, I'd rather do a $5 wide strike. Well, then you're going to come, now we have a week less, but could we then get a little bit lower and do the 365, which, has a probability of 40% of being in the money at this 365 level. And we get paid $1.95 on a $5 wide strike. So we're making almost 2 and we're risking 3. That's almost a 66% return on our risk. So if we do, it's probably around 60, 192 divided by 308. So that's the $5 minus the $1.92. That's a 62% potentially return on our risk. So if we look at that and say, okay, we're good with that. First trigger sequence, right click, create an opposite order. And you know, if it gets to the point where maybe we have a 70% gain or if we had a 60% gain in a week, we might say, hey, we were willing to be in this for 3 weeks. If I've got a 50 or 60% gain in a week, like, I'm going to take it. And so you can go in and choose to exit. This isn't a, hey, this is my target and it's do or die on that hill. Yeah. Yeah. So, and we're at 365 here. Somebody said we were at 368 earlier today. Okay. So here's our short put vertical. Now, I think Square is also in this crawling off, you know, trying to jump off the struggle bus. You know, and when we look at this, like, you know, what I see, the first thing I see is this inverted head and shoulders when I look at this pattern. Do you see what I see? And this is an example of, like, do these things always work? Because it did kind of break out above here and it did come back and retest. And then it, you know, it fell back down. And so you're going like, whoa, snap, that didn't work. But now we have this other pattern, kind of this sweeping double bottom pattern that started like at the end of last year, December of 23, you know, because this is a 2-year chart, and kind of went all the way until what, like almost November. And then it finally broke out and has kept on going. So let's kind of come in a little tighter on this. But we've seen that Square has been consolidating for a long time, and it's not down on the year. It's up 13%, but this is a tech stock. And, you know, a lot of those tech stocks are up, you know, hugely this year. So this one is, you know, it was in a hole for a long time, and they finally seem to have stopped digging. You know, and if we look at just this short-term range, that's still, you know, a 19, you know, point range. So if you said, okay, well, it might go from 80 to what, 99. And what did it do? Came right up here to 99. Like, isn't this fascinating stuff, the technical stuff? Like, it's so, you know, if we look in the shorter time frame, which is really still like, this pattern took all year to create. Let me just pull this down. And so, you know, over the course of this year, it's created this double bottom. And then it broke out, came back to retest. And then, you know, some would say, well, you're talking double bottom. Like, I'm seeing these bull flags. But then it got hammered yesterday, which kind of ruined our nice bull flag pattern. But again, we've got this Harami pattern today. So could we look at that and say, well, it seems like Square has dug its way out of the hole. Might it continue to move forward? And so could we, you know, honing in here, say, well, if we look at yesterday's low by hovering over the candle, I can look up and say, okay, that was at 87. So if the belief in looking at this is that this might continue up, could we sell maybe the 85, something below that? So let's come to the trade tab. Now, if we look at January, so what's the advantage of going out to the January monthlies? It's like, if there is a little bit of instability, having that extra week, if we're in that 20 to 50 day time frame, gives us a little more time to course correct if that's necessary. Okay, so we are going to come in here, and where did we want to be below? The 85? Well, and again, does it trade more than 1 million shares a day? Check. you know, at this 8250 strike, do we have at least 20 times the number of contracts we want to trade? 4,000. Yeah, I think we're good. You know, do we have a tight bid-ask spread? It's about 10, 12 cents. So yeah, that's about 5%. We're good with that. So we're going to right click, sell a vertical, 67 cents. Now, if you do a lot of these, you know that 50 cents gives you a $2 risk. That's a 25% return. We want at least 29. Well, we're getting 19 cents more, so pretty confident that we'll meet that. So what are we risking? $1.81 maybe? I'm not saying my math skills are great, but that's about a 38% return for a trade we'd be in for 29 days. So that meets our example requirement. You know, so an 8250, it's trading at 88 right now. So, you know, that gives it about $7.50 worth of wiggle room. And so if we look at that and we say, okay, you know, here, this will tell us our break even is at 81.79. So as long as it stays above that, we're ahead of the game. The most we can make is 71. Our theoretical max loss is that 179. So how many of these could we do? Well, we could do 2. That would put us just under 400. If we did 3, well, let's see. $5.40, we'd probably be okay to do that. So we're going to come in, add our exit. We're going to add our exit, single order, first trigger sequence, right click, opposite order. Make this 14 cents. Good till canceled. Confirm and send. How much could? Oh, you know what? I flipped these around because I'm saying, hey, we're supposed to be risking 540, not making 540. I'm going to delete this whole thing because this has us buying these. And it was, I must have clicked the wrong button. So sell, we want to sell a vertical for 70. First trigger sequence or first triggers all. Either one will work. Right click, opposite order, buy it back for 14. This is where like paying attention and not just, you know, whipping through this. We're selling these put verticals because we're bullish, right? Right. How much are we risking? $540. That's our theoretical max loss. And this max loss will hold as long as you exit prior to expiration and manage your trade appropriately. You know, our max profit, 210. We're saying, hey, we're willing to take a little bit less because we want to exit prior to expiration. We're going to put that in our short put vertical bucket. So there's 3 example trades of trend reversal patterns. Okay. And we want to be watching for those because they can provide sometimes interesting trading opportunities for us. Now let's look at what happened yesterday. So we can see, you know, and you know, when I said we really got hammered yesterday, well, it looks like our long put, this one we just put on today, so that one doesn't count. Our long call verticals, we're still down $1,000, and we were in the green prior to yesterday. But we've got we were down 1,700 this morning, so we've made 600 of that back. And then we're down $592 on these short put verticals. And when I looked at this just before the class started, every single one of them was up on the day. So, you know, we were down closer to 900. And so we've kind of dug our way out to the tune of about $260. And so when we look at these, you know, a trader might not want to start hyperventilating about how much they're down, because we had this kind of weird whipsaw thing happen in the market, where the Fed chair's comments didn't sit well, where he said we're decreasing 1/4 of a point now. The market was expecting maybe 4 more rate cuts next year, and he's saying, yeah, maybe 2-ish, not 4-ish. And people didn't take well to that, obviously. But we can see a lot of these are recovering. Now, what is the one thing that does make you say, now I need to seriously pay attention? Greg, you've got it. So you win the prize for today. If I could reach through and offer you something, I would. But it's this little in the money. Now, the only time this will show up, this in the money, it could be through both strikes, and it will not show this in the money tag unless it's expiring this week. Okay. So what this means is this trade is in trouble and it's expiring this week. It's like, hello, we need to do something, because what's one of our rules that we do not break? We don't let a trade go into expiration, one of these trades. So, and this one is particularly troubling because the short strike is in the money and the long strike is not, which means if this were expiring today and it expired below the 295 strike, you've now sold stock that you don't have. And you have a short stock position, which has unlimited risk associated with it. And then this would expire worthless. Now, if you catch this right after the market's closed, you do have a short window of time in which you could choose to liquidate the position, or you could exercise your right to exit this position. But like, this expires tomorrow. This strike is in the money. What I notice when I looked at this is that, I'm down $50, but we're up $75 today. So this is heading in the right direction. And so, we could take our lumps. We're down $50, but we could be down, and this is, I wonder why we did only one contract. That's unusual. We would normally have done at least 2. But, we could also wait until tomorrow. And I'm teaching again tomorrow in trading a smaller account. So we will look at this tomorrow. But let me change our time frame on this, because here's our strikes. The 295, and so this is the 295 strike. And then the other strike is the 290, 250. And let me just come in. I don't normally come in this close, but if this moves up tomorrow, and how much does this move in an average day? Well, over the last 14 days, it's moved on average, $5 or $6 a day. And it's at 293. We just need that little sucker to get up above 295. And so, we might just say, hey, tomorrow, come 10 o'clock Mountain, noon Eastern, when we link arms together for trading a smaller account, wherever it is, if it's above, we might get out for a profit. If it's fallen further, we might take more of a loss. But given that we have this bullish Harami pattern on the chart, and somewhat of, some might describe this individual candle as a bit of a spinning top, we might just wait. So we're going to move this till tomorrow. But if you said, hey, I'm getting on a plane and I'm flying to Cabo in the morning and I don't want to look at this again, I'm just going to take that $50 loss and be done, because I don't want to get on the plane, have them have a problem, Wi-Fi is out, and now I'm snookered. Yeah. Somebody's asking a question about covered calls, which is outside the scope of this class. If you know that you don't want to be called out, you might want to buy it back. If you've got the majority of your gain out of it, you might want to buy it back. You know, if it's in the money, are you cool with being called out? Because if it's in the money at expiration, you will be. But that's really not what we're talking about in this class. Okay, so if we wanted to look at some other examples, and we're now, close to wrap up time, but we have done 3 trades today and 5 has filled. I taught the long vertical class today and we did 3 example trades there, one on Affirm, one on Uber, and one on Kroger. And so, if you were looking to practice, we did 5 and Lulu. Let's go look at Lulu and just make sure that these get filled. And then we did one on Square. And so the Square, we might just want to be patient on Square. Lulu, we're waiting to open. It's saying, we should, we want a credit of 177. They're saying the midpoint is 177.50. But let's say you're heading out to do some holiday shopping, in which case, may the force be with you. You might say, I'm willing to take a little less of a credit just to, make sure that this gets filled before I head out the door. So we're going to adjust that price a little bit, and that's how you do it. And then we're going to come to the monitor tab. So now we can see Lulu at the top, and here's our trade on Square. And we're going to knock that one down we're just going to knock it down by 2 pennies to see if we can get that one to fill also. And then we'll review those in the Trading a Smaller Account class on Monday. Yeah, I don't know where the phrase snookered comes from. We were talking about different expressions and where they come from. And you guys call me on this stuff so much, I've started looking them up, because one of my expressions is Bob's your uncle. And somebody said, like, who's Bob? So I looked it up. Bob was a member of Parliament in the British Parliament. And he got his nephew, I lost my mouse. This is weird. It stopped responding to my request for movement. Let me just plug it back in again. There we go. Anyway, Bob got his nephew a cushy job. So in Britain, the expression became, well, easy for you, Bob's your uncle. That's why you got that job. So if you're wondering what that expression means, there we go. Okay, so it looks like those, did we get them all? There we go. So we did trades on Square, Lulu, and 5. All were short put verticals, and we, all were trend reversal patterns. We're going to come out a little bit further. And remember, I said, we did a trade on Uber today, and this is a bearish trade. But could we do, if we wanted to practice, could we do a short call vertical? We could have, just to practice. Could we have practiced on Affirm? And said, hey, could I come down here below yesterday's low of 62? Could I sell the 60 maybe? Or the 61 on Affirm? Could we do a short put vertical on Affirm? Well, we could, go through that thought process and, are there enough contracts? And then Kroger seems to be marching up the hill. They've announced a $7.5 billion buyback. A lot of the analysts are raising price targets. And could we say, well, we've got this, 30-day moving average acting as support. It's currently sitting at about 60. The stock's at 61.56. Could we sell something at 60 or below? It's like, well, we could look at it, right? We could look at it. How about CrowdStrike? And as you'll recall, back in the summer, this thing that was responsible for that. Wasn't it CrowdStrike, the blue circle of death back in July? Yeah. And so, this has been, digging its way out of a hole also, right? Here's hole number 1, cup and handle. But it seems to, be rebounding. And, even if it's going sideways, it seems to have come down and, remember the nights, like it's come up and hit this once and then lingered again and again and then come back and then come back. we got like 5 or 6 nights there. You know, there's strength in numbers. And of course, until there isn't. Yeah. Yeah. So, you know, could we sell something below that 344? Well, we could look at it. Problem is, we only have 45 minutes. So, as we end today, I want to thank you for being here, for supporting this class over the last year, and for it hopefully supporting you. I'd like you to hit the like button if you haven't done so already. It helps move this up in the algorithm so more people can find this content. I believe there was a survey today, and Cameron, if you could repost that, that would be awesome. And there's just 2 questions in the survey. One was, I hated it. 10 means I loved it. And then there's everything in between. And if you type a comment in, you know, what would you like to see in the new year? Are there topics we haven't discussed lately that you'd love to see again, you know, or that you'd like to see brought up? And my promise to you is if you fill out the survey, I'll read each and every comment. Yeah, and so will the management team. And then subscribe to the channel, follow us on the Land of X, Cameron May CS, Barb Armstrong CS, be there, be square. Have a great rest of your day. Up next, Connie Hill with long options. Bye for now.